Hello, this is Ryan Malley for Shareplanner.com. Today I want to go over a trading strategy of mine that I use on a fairly regular basis. It's an intraday trading system that is very easy to replicate, and it essentially just uses the tick indicator and a 2x ETF. In this case I use SSO and SDS. It can be played both ways, and the tick indicator, for those of you who are not familiar with it, is essentially all the stocks on the NYSE, and it measures those stocks that are upticking and measures that against the number of stocks that are downticking. So if you have a tick reading of uptick reading of 2,000 stocks that are moving up and 1,000 stocks that are moving down, then you have a tick reading of a plus 1,000. Now, if you have 2,000 stocks moving down and 1,500 stocks moving up, then you have a tick reading of negative 500. For the most part, the tick reading likes to hover around this 0 mark here. So if I draw a line right across from here, and it's going to be a red line, so it may be hard to see, hopefully not, you'll see that it almost crosses nearly every 5-minute reading here on the tick. So what happens then is I look for extreme readings. I like to see outliers, and then I fade those outliers. So yesterday, when the S&P decided to downgrade the U.S. debt on 4/18, we saw a 20-plus point sell-off, okay? And a lot of people were losing money, and it didn't seem to find a bottom. Now, I will say this about this trading strategy is that when you're placing the order, a lot of times it takes guts to do it because everything just looks really bad or really good, and to go against that trend is often very difficult. So in this case, the market was moving down, 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 and we started getting these negative readings. Now, I don't like to trade this in the first 30 minutes of trading because of how volatile the first 3 minutes can be in the market session. So I usually wait for that to pass. And in this case, you did have a tick readings that were getting pretty close to like 900 or so to the downside. Well, at 10:05, you got a tick reading of about 1100 essentially. And where does that correspond on the charts? Well, this 1100 reading is going to correspond with about $50.86 on SSO. So that would be your reading. Now, you're not going to get right in at $50.86, but you'll get very close to it. You'll get in probably around $52 or even less. For me, on this particular day, I got in at 52.01. And it bounced very nicely, as you can see from here. So if I was able to get in at $52, it then proceeded over the next 30 minutes or so to move all the way up to 51.36. That is about a 0.8% gain. Not bad at all, okay? What I ended up doing is holding on, and we got another extreme reading at 1180. And I tell you what, at that point, it was very tempting to want to dump the stock without even looking at the TICK or tick indicator. But when I looked at it, I say, well, man, we're like getting a reading at 1200. That's getting pretty extreme. So that probably means that you get in something like 1200 stocks or 1200 stocks moving on the uptick, and then 2400 moving down, or that's just playing with the numbers there, but it's something of that nature. And what I did is I knew that we were probably in for a pretty good bounce, or possibly even the bottom of the day. So I held on. I felt like the risk reward was very favorable at that point, and what we ended up getting is a very solid march back upwards and a close around $51.60. So then, especially if I would have increased my size position, because even at 50.78, we're only talking about 10 cents difference from where the lows were back at 10:05 compared to the lows at 11:05 an hour later. So there was a good opportunity to really profit off of this. And then in this case, I actually held overnight and sold it at the beginning today at about 51.75. But you can see here how effective this strategy can be. And then in today, like today, we haven't had a lot of positive momentum or a lot of strength in the positive move upwards that we've seen. We've gotten a couple of ticks to the upside that reached plus 1,000, and in this case it happened at 140. And if you look at it at 140 here, you can see we got a good push, and then we sold off a little bit thereafter. But nonetheless, still a profit opportunity, not a huge one, but about a 0.2, 0.3% return that you could have made off of that. But even still, I mean, even if the market decides to move down at the end of the day, there's a potential for that. It hasn't really moved against you, but I that is why too that I prefer to play it to the downside. Um, I like to play that dead cat bounce play, and that's what this allows you to do is try to time that dead cat bounce with a overreaction in the markets that causes too many stocks all at once to go down versus the number of stocks that are actually going up. And if you can time it good and the tick indicator does allow you to do that, you can make some decent money off of that. And I also find it to be good reversals to see if I'm trading at ETF and not even using the tick strategy, but I start seeing tick readings that are going in my favor. So, for instance, if I'm long SSO and I start seeing these spikes above 1,000, that might be a good sign that okay, the stock market is starting to get a little overheated at this point, and it might be good for me to close out my position. And that's what I'll oftentimes do. So, tick reading, just to summarize, I look for moves that are well outside of the typical band for that bandwidth for that day. So if you're getting a ton of readings that are say at 1,000, um, and it's a pretty down day, don't don't look for an entry at like a negative 1,000 tick. Instead, maybe look for something that's like negative 1,200 or negative 1,300, and use that as your entry price to get into the stock. Because what you want is you really want an outlier from all the other action of the day. You just want that capitulation in a sense. You want to find the bottom in the stock market that from that intraday perspective, and then ride it back up. And this is what that allows you to do. But if you're getting a constant stream of negative 1,000 readings or 1,100 readings or whatever, then it's probably not a good good entry at a negative 1,000 to go long on. Instead, wait for it to perhaps get down to the 1,100s instead, and then that's where you can make your real money. And that's going to do it for this trading strategy lesson. I hope you guys can learn something from it and apply it to your own trading.